Hey everyone, Coach Investor back on our earnings video for today, and I definitely think that this will be the last earnings video of 2023. It will be about Adobe. Now, Adobe did beat top and bottom line estimates pretty comfortably, yet the stock is down around 5 to 6%. So what exactly has happened? Well, if we go and look at this right here, this is on Koifin, link is down in the description for 20% off if you would like to check it out. So right now that I'm making this video, stock is down 5%. Why is that? Well, first of all, let's look at its performance year to date. It's up 85%. So of course, it went with all the AI hype. Now, looking at the multiples right now, PE, EV to EBITDA, price to sales, price to free cash flow, we can clearly see that currently, compared to its close to 10-year mean, Adobe is more expensive. So you're buying this stock at a premium. And even if we narrow it down to the last 5 years, we can clearly see PE in the next 12 months, for example, 34.7 times compared to 34.5 times, of course, with the 5% drop. And maybe when the market will open, it will drop a bit further. Then yes, we're getting back to maybe under the 5-year mean. If you look at year to date, here you can clearly see that we started the year much cheaper than where we are right now. But with Adobe, you also have to look at this, how your shares are getting more and more valuable over time. You can see here in the last 10 years, shares outstanding have come down. Free cash flow per share has gone up. And then even for the next 5 years, the EPS estimates of the growth rate here is close to 16%. Now we'll be going over the report, but just to show you what analysts are expecting for Adobe going forward, you can clearly see here that sales expectations for the next couple of quarters, the year-over-year growth is still double digits. And the same can be said when you look at EPS, whether it's adjusted or GAAP, it's all double digits. Now what did add a bit to the drop down is this. So US regulators are investigating Adobe cancellation rules. So this is the FTC now going after Adobe. We've seen this as well with Amazon Prime. Make it easier for people to cancel their subscription. It is not normal that you have to click through 5 pages. Are you sure you want to cancel? Why do you want to cancel? Is there anything we can do better so you won't cancel, etc., etc.? I understand, and for once, I agree with this decision. So this has put a bit more pressure on the stock as well. We're going to talk about the Figma acquisition a bit later in this video. Now, if you enjoyed this type of videos so far, leave it a thumbs up, subscribe. If you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. So the numbers for this quarter, revenue, first time that this quarter they reach $5 billion or more. That grew 12% year over year. GAAP EPS was $3.23, non-GAAP $4.27. which increased 28 and 19% year over year. Now, with regards to fiscal year 2023, so they're already done with this fiscal year, revenue came in at $19.41 billion. That's a 10% growth year over year, or 13% on a constant currency basis. $11.82 GAAP EPS, or $16.07 non-GAAP EPS, which both represent 17% growth year over year. So again, here you're seeing another company where the bottom line grows faster than the top line. Now, with regards to the fiscal year 2024 targets, so that and Q1 came in a bit weak-ish. That's also why you see the stock drop 5%. So right now, total revenue is expected to be $21.3 to $21.5 billion for fiscal year 2024. Digital media net new ARR around $1.9 billion. Digital media segment revenue $15.8 billion at the midpoint. Digital experience segment revenue $5.3 billion or so at the midpoint. Digital experience subscription revenue, that's closer to $5.8 billion. And then earnings per share estimates, GAAP $13.45 to $13.85, non-GAAP $17.6 to $18, and I believe those met the expectations. Now, circling back here, they did touch a little bit about the Figma acquisition, so we remain excited about the strategic opportunity with Figma to jointly advance product design, accelerate collaborative creativity on the web, and redefine the future of creativity and productivity. We continue to engage with the European Commission, the Competition and Markets Authority in the UK, and US Department of Justice as they conduct their regulatory reviews. The EC has provided a preliminary statement of objection and the CMA has issued provisional findings of competition concern. We strongly disagree with these findings and are responding to the respective regulators. Now remember, when this acquisition was announced, the market wasn't so happy with this announcement, and actually Adobe, the stock, crashed. Now that this announcement, we've talked about that before, now that this deal might be in jeopardy, you're not really seeing the stock reacting positively. Remains to be seen what happens, but this is definitely something interesting to look at, how the market will react if that acquisition does go through in the end, if it's going to be the same reaction as it was when it was announced, or maybe the market has changed its opinion. Now diving into the different segments right here. So Adobe Creative Cloud, creative revenue was $3 billion for the quarter. Digital media ARR came in at $569 million and revenue of $3.72 billion, which increased 14% year over year. As for Adobe Document Cloud, the revenue there came in at $721 million. Acrobat Web monthly active users increased 70% year over year. Acrobat Mobile monthly active users surpassed 100 million users in Q4, and Liquid Mode has already served over 1 billion files to customers on mobile devices. And actually show us here a couple of big wins when it comes to enterprise customers. So those include Bank of America, Department of Veterans Affairs, MasterCard, State Farm Auto Insurance, and Volkswagen. As for Adobe Experience Cloud, so the revenue there came in at $1.27 billion with subscription revenue of $1.12 billion in Q4 fiscal year 2023. And here the big customer wins include Coca-Cola, Ernst & Young, IBM, Marriott, Riyadh Air, Santander Brazil, Sony, Southern Graphics, Unilever, Vanguard, and Verizon. I mean, you would have thought that all these big companies were already clients of Adobe, but clearly not. Then with regards to revenue by geography, 61% is still America, so that's the biggest segment for them, 14% Asia, then 25% EMEA, so Europe, Middle East, Asia. They say here RPO is still at $17.22 billion, cash and short-term investments of $7.84 billion, cash flow from operations $1.6 billion, and they repurchased approximately 1.8 million shares in Q4. Which leads me now to this right here, the end of the video, the graph. Right now we are very, very close to being overbought. Of course, with the 5% drop, maybe even more during the day, maybe less, we will get a bit further away from that. But just so you know, we've got here the 200-day moving average sits at $500 in case it drops more than the 20 and the 50-day, which currently sits at $600 and $580 or so. Let's see if those can serve as a short-term support or not. Remains to be seen. Currently, we are going to open below the 20-day moving average. So to conclude, what we have here is a company that is executing extremely well. The stock is up 85% year to date, so the expectations are extremely high, especially when you talk about AI and such solutions. By the way, they are actually one of the few companies that actually make a lot of money thanks to AI solutions. But hey, okay, outlook was maybe a bit weaker than what the market was expecting, given the premium that the market gives this company. Fine. But overall, this company is still growing top and bottom line, free cash flow, margins are still increasing. This is a company that is buying back their own shares as well. So you as a shareholder, if you are a shareholder of Adobe, you're a shareholder of a very, very good, heavy compounder company for the future. Of course, this is not a hyper growth stock, but this is a very, very solid company to hold for the long term. Remains to be seen what happens with the FTC, with the Figma acquisition as well. But right now, if the stock drops lower, if we go to the 200-day moving average, $500, I do think it could be a very, very good entry. Of course, I could be wrong. Do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.